All right, well, Southwest Airlines, you may know them for their bags fly free ads, and it looks like that is really paying off for the company. The carrier turning a profit of $11 million in the first quarter, right in line with the Street's call. The CEO, Gary Kelly, joining us now to talk about it. Thanks for being here, Gary. Appreciate it.
Good morning, Poppy. Great to be with you.
Does this show us that consumers have really turned the corner, not just business travelers, but individual leisure travelers? Are they willing to spend more now? Is this the turning point?
Well, I think it depends. I think consumers more than ever are really looking for value, and you look at the results at Southwest versus our competitors, and I think we're seeing an enormous share shift like we've never seen before. I think Bags Fly Free is helping that because it underscores our commitment to low fares and value, and again, that's what consumers are looking for. But yeah, our revenue growth is superb. We were up 11.6% year over year, and I'd take that any year, much less a really tough economic environment.
Well, you know, when you stuck your guns and said, forget it, I'm not charging for bags no matter what, a lot of analysts criticized you. People called it irresponsible. People said you were going to lose revenue that was just sitting there waiting for you to take it. And you say you've gained about $1 billion because of it, looking at taking away market share from competitors. Is that the case?
Well, I think that's a fact that we've seen a share shift to Southwest. It is a fact that it's worth a lot of money. If it's not $1 billion, it's real close to it. I can't prove to myself or to you that it's all due to Bags Fly Free, and I don't think it is. Again, I think it's just a component. But the thing that I'm proud of is that it does fit in with who we are. It's what we stand for. We're very pro-consumer. It underscores our commitment to low fares, and we were bold about it. You can't just assume that people will be aware that you don't charge, so we came out with a very dramatic advertising campaign, and it's been very successful. Hey, the results are great. We're outperforming everybody else, and we're not going to change. It's very gratifying to see those kinds of results.
What about, Gary, the consolidation within the entire airline industry? I mean, you see legacy, massive carriers in serious talks about teaming up. Of course, we saw Delta Northwest last year. What does that mean for Southwest? Are you even considering tying up and having a broader partnership with one of these or more than one of these legacy carriers?
Well, you know, the industry has been consolidating for 3 decades. 5 decades, you know, I don't know when you want to start that, but it does feel like there's a natural evolution here. A lot of barriers to consolidation, of course, a lot of issues to address, but it's not surprising that those rumors are out there, and of course I don't know what's real and what's not real. We want to grow as an airline. We have a low cost advantage. We have a great value that we offer customers. We have the best people, in my opinion. We have outstanding service levels, so there's every reason for us to believe, with the kind of results we have, that we can continue to grow. If part of that growth strategy is merger and acquisition, I think we have to be open to that. We've had 2 acquisitions in our history, and we'll just keep our eyes open and look at opportunities as they unfold.
All right, so for you guys, M&A activity down the road is not out of the question. What about growth internationally? I mean, you keep saying we need to grow. Is that what we're going to see as Southwest around the world?
I think that that's probably the case. I don't know that it is an imperative. We have been undertaking a transformation at Southwest Airlines the past decade to increase our capabilities, and being able to offer international service is one of those capabilities that we want to add, and we're not there yet. But there's every reason to believe that we can add Canada, Mexico, the Caribbean to our U.S. route map. We're now the largest airline in the U.S., and it would be very natural for us to continue that expansion.
Southwest benefited from, lucky or smart, whatever you call it, hedging during the oil run-up. And now, Gary, you look at fuel prices up 20% from February, looking at crude around $82, $83. What's your call, and how are you managing that going forward? So if we see the big spike again, your airline doesn't get stuck where many others did.
Very hard to call. It's very hard to call. So I think the best judgment that we can make is we need to have an insurance program that has funding associated with it that protects us against catastrophic prices, number one.
Do you have that now?
We do. We've got a good hedging program in place. We've got positions all the way out through 2013, and so I feel good that we've got that catastrophic coverage in place. We're showing that we can make money in the $80 to $85 crude oil price range.
We're
and
pretty
I'm
close,
very
though, to
pleased with
topping that. So it's
True.
a question.
So I think, are we prepared at Southwest for $120 crude oil? We have catastrophic coverage in place to protect against that, but that doesn't mean that we'll be prosperous and making money. So we've got to continue to focus on that, reduce our fuel burn. We're introducing GPS navigational technology into the fleet, which will be far more efficient than what we've been doing, as one example. And we'll have to continue to hedge going forward, and it's going to cost money to do that.